Hello and welcome to Fidelity Connects, a Fidelity Investments Canada podcast connecting you to the world of investing and helping you stay ahead. In today's episode, we are joined by equity research analyst Evan Zehnal and equity research associate Vishal Chopra to discuss the evolving AI landscape and its growing impact across the investing sector. Evan talks about the current AI narrative, its impact and benefits, and how AI is being used by companies. Vishal expands on the shift in corporate budgets over the last 2 years, how companies aim to tighten their spending, and what these implications are for AI's adoption. Evan and Vishal both discuss the role of blockchain in the authentication process and how to ensure data reliability. They touch on questions including how are companies using these measures amid pricing and cybersecurity concerns. Evan and Vishal also discuss the current artificial pull and push of the software cycle and how companies are looking to branch out from some of the main semiconductor providers. This podcast was recorded on June 7th, 2024.
I wanted to sort of ask you to look back 6 months, because things move really fast in this space, to the type of engagement and questions and pieces of the puzzle that are happening right now and the questions that you're getting versus the engagement even just 6 months ago. Evan, I might begin with you.
Sure. So I think one of the biggest questions is, when do we start to see real AI? I cover software in software. When do we see AI benefit, kind of an AI narrative, compelling AI use cases? And I think there's a lot more focus on that just because we are kind of 6 months down the road. And you've gone from seeing AI benefit just in kind of some of the semiconductor providers to now branching out more to some of the hardware providers. Software is the next step. So I think now there's this anticipation or this question of, when do we really start to see the benefit in software?
Oh, that's fantastic. So Vishal, why don't you pick that up? Because we've been watching software struggle, actually, probably because of these questions. So just take us through some of the, there's been some eye-watering pieces of news on an earnings front, watching some big software companies really take it on the chin, actually.
Yeah, I think what you've seen over the last 2 years is really a continuation of companies wanting to tighten corporate budgets and make sure that maybe they're not spending too much on IT. So you saw that with Salesforce in terms of calling out just tightened corporate budgets. And I think overall, you maybe similar to the consumer, where you have a lot of subscriptions and you're taking a look at some of those subscriptions. You're like, do I really need this? Are we really using this piece of technology? So that's part of what software is really going through, which is post-pandemic, maybe a bit of rationalization on terms of, hey, we're spending a lot of money on this, but we don't actually use this, so we can cut that spend.
So how much of it has to do, just going back to what Evan said, of sort of the anticipation that there's something new they're going to need to spend on, and that is AI and how that comes through? So there's a little bit of perhaps purging, but at the same time, the expectation. Maybe you can just touch on that.
Yeah, so I think when ChatGPT came out in November of 2022, lots of elevated expectations when it came to software and specifically AI software and how quickly that was going to be monetized. It's been a lot slower, and I think a lot of the reason for that is enterprises just need to get ready to adopt AI technology. If you're a company, you can't have documents that are maybe personal in nature on your servers get served by an AI or through a chatbot to somebody who shouldn't be seeing those documents. So
as part of data.
Yeah, as part of data. So for example, like whether or not you have like pay stubs, et cetera, that should be private information, not disseminated to everybody. And hence you need to make sure that there's the proper guardrails around those technologies rather than just saying like, hey, here's everything that we have in our database, access it all.
So really interesting in sort of setting up the guardrails. But then, Evan, what about going to just figuring out and kind of hashing out the details of when AI gets something wrong or you get misinformation? That's going to happen in everything. But it could be some pretty heavy costs actually to that.
Yeah, I think that reliability piece around hallucinations or wrong information is really important. And there's different levels of sensitivity, right? If it's a non-critical task in an enterprise, right? If it's just me getting a couple words wrong to an email with a colleague, that's one where we're planning a social event, that's one thing. If it's me getting some things wrong on my financial analysis because the model gave me wrong information, that's a huge problem. Or if it's customer facing, right? If there's a customer service conversation happening and I give the wrong details on return policy or shipping or cost or anything like that, that's obviously a much bigger mistake with higher ramification. So I think you have to kind of think about the sensitivity of the workload and that reliability piece and put that together to figure out where you'll see enterprises more comfortable rolling out the early use cases. I think it'll be more internal for kind of tasks of lower importance.
Okay. So I'm going to ask the impatience question. So when are they going to sort that out? How long is that going to take? Are we looking at September? Are we looking at next September? Is there a sense of, obviously it's been worked on. How long is this going to take to get some real momentum there?
I think
I don't know.
it's really hard to know. One thing that is for sure is that models are continually improving. They're getting more accurate. So from at least that perspective, we know that that pace of change is continual, at least improving, and we're getting closer to the point where things are more accurate, maybe being able to be adopted by enterprises. But I think it still remains to be seen about like what is that point, and I don't have a defined point of 95% accuracy or 99% accuracy. It's unclear, and maybe we'll see as things evolve where that point really sits. But
Yeah.
I think you're seeing some early use cases. So code generation has been the first early use case, and you are seeing adoption of that in enterprises today. That's a really easy kind of use case because your code input is so formulaic and there's a right answer. The other area you've seen early progression in is around level 1 customer support.
Okay.
So the initial customer support conversation, you're starting to see some early use cases around that. So it's really use case specific, but you're seeing early signs within recent months of individual use cases. So you're starting to see some benefit now. And the question is, what is the cadence of additional tasks or additional use cases that you'll see AI really take over?
Let's just bring in sort of the consumer arm of this. We know that we're all sort of attached to our phones, and there is a big question about when the device itself is going to start showing up with AI options in a new way. That could be coming very soon. It could be further out. How crucial is it to the overall story of this? Maybe I'll begin with you, Vishal. We can open this up because we know there's some large announcements next week.
Yeah, I think in general, very important. You take a look at how often people are using AI technologies, and it requires a lot of familiarity to be able to prompt well and to be able to share with colleagues, for example, what techniques work when you're using these technologies. So putting it into a device that people use every day and maybe improving pieces of software to make sure that they're being able to use it on a daily, maybe hourly basis will really improve just familiarity with the technology, and I think people's willingness to actually adopt it, even at work.
That's really interesting. So yeah, that sort of the consumer piece may propel a lot of other things. Is there more to say on that?
Yeah, and I think the consumer is familiar with the use case with respect to just querying a large language model. So ChatGPT has had hundreds of millions of users, and people understand that experience. They understand what they're getting. So to the extent you see on consumer devices a similar experience to what the consumer has already seen, I think you could see earlier adoption there because once again, the consumer has voted with their attention on the value of these large language models, and now you're making it easier to access on a more device-oriented form factor, which I think is convenient to the consumer. So that should see, I think, earlier traction given the familiarity, given the convenience of the device form factor.
Evan, what's the fly in the ointment that we're hearing about? Just there's questioning about how useful is it? And I sort of harken back to that discussion of blockchain being announced, this incredible new tool. It's going to revolutionize everything, but then we sort of struggled a little bit to see how it would be way better than an Excel spreadsheet with lots of security controls on top of it. Is there anything similar to the AI wave here? There's some questions that are popping up you can see.
Yeah, and I think those questions are really valid. With blockchain, if I step back, that was really a solution in search of an answer, right? We had this immutable way of recording transactions. It was decentralized. There were a lot of interesting technology pieces there, but it was really, then people have to go find an answer. For AI, I think people understand what the really compelling use cases are, right? I would love for AI to draft an email in my voice to save me time on that. I would love an AI to answer all the questions I have about HR and return policies and how close I am to loyalty status on Air Canada, things like that. but you just have to make sure the reliability is there, which is improving, and the technology curve is improving just as you get more data and compute solving this issue. So I think people understand the use cases for AI. It's just a question of when do you get to that powerful enough model and enough reliability on the answers for the consumer trust to really be over the line.
Really interesting. On the hardware sort of piece of the whole story, we can all talk about this, but just we've seen, again, some large hardware companies come out. They are seen as new plays on AI and a different sort of legacy software or legacy computer and tech companies. They also have had a little bit of fly in the ointment. We've seen some disappointments in terms of earnings commentary. What's that about? Because it seems like hardware is a big piece of the story. Where does it go from here?
I think largely when you take a look at the hardware stocks, it's important to know which ones own IP and which ones don't own IP. So one of the largest ones in the world, it does have its own proprietary technology. You need to go to it as a clear competitive advantage. For some of the maybe more legacy ones, they're really good at manufacturing, and that's part of the reason why they're AI winners, is the fact that if you want, like I think, a well-manufactured server, you can go to maybe a few different companies out there, but there are only a few with that experience. It's just that given that they don't have enough of their own proprietary IP, there's more questions around margins as well as just overall pricing power for some of these legacy or legacy hardware companies.
And just go a bit further into that. I mean, there's sort of this question of like, is this actually going to be the revenue jolt that we think? I mean, that sort of seems to be the implicit question.
Yeah, I think the big question on hardware that you've seen appear recently is how profitable is the AI piece? There's a lot of demand. Some of it might be pull forward, some of it might be double ordering given supply constraints. There's a bottleneck on actually procuring the GPUs to get these servers out to people. But I think the question is, though there's a lot of demand, like what is the level of profitability for this ultimate kind of AI server outcome, or where these hardware providers sit? Does it get commoditized like you've seen in prior cycles, and really not a lot of the AI value accrues to these server hardware companies? I think you've seen some data points in the last earnings period that made the market question that who really wins on a profitability perspective in this AI world. And that could look different than kind of near-term revenue momentum.
Right, really interesting. And that sort of comes back to the IP, who owns the IP and actually can reliably produce what is needed to be bought. For this to move forward. I wanted to ask you a little bit about the implementation, the companies that will come on as consultants to ultimately do this. Is it happening? I might put this to both of you. Evan, I'll start with you.
Yeah, so I think when I think of how AI happens, every board member in November of 22 went home and played with ChatGPT and was like, this is great technology. So they called in some of the strategic consultants, the McKinseys, the Bains, the BCGs of the world, try to figure out a strategy. And then in my kind of perspective, the next step is to really bring in the Accentures and the Deloittes of the world to implement the strategy and figure out use cases.
And procure it, right?
And procure it.
Yeah.
And get the data ready, implement the governance kind of type of restrictions that you need in the enterprise to be able to adopt AI that Vishal talked about earlier. And you've seen kind of intent from these systems integrators, but you haven't seen actual AI demand bookings flow through in the way I think a lot of the market would have expected. And so the question is, when do you really see that demand flow through? Because there'll be early parts of enabling that enterprise AI workflow. So I think that's one of the questions you have on the implementer side.
Yeah. Anything to add there? Yeah.
I think, on the implementer side, as Evan mentioned, they'll be one of the first ones to see the benefit from it. And I think the other thing is I think there's this debate about whether or not, like, how much implementation is required for these technologies, whether or not it's like being able to turn it on directly or et cetera. Do you need a whole new team? Is it a bolt-on to your existing, for example, like Microsoft license? So there's some minor debate there, but I think overall, even if you talk to some of the companies that deal with Microsoft and resell Microsoft to some of the smaller businesses that are out there, they're also not seeing some of that strong momentum yet. And it seems to be a question of, again, like just accuracy on the models, and then also just governance and people being afraid about security.
Yeah. This is goes to data. I think I've got this question right. So can blockchain not be leveraged to authenticate information, data basically for AI? Yeah, that's interesting. Like, let's talk a little bit about the data producers, like where this is going to be drawn from, and certain areas, again, where I think you mentioned it'll be super important to get it right the first time, and other places where you can sort of work your way up to reliability. But the data, where's it coming from and what can be used to make it better? Let's sort of dive into that one. Evan, you can
I
start.
think that's a really good question. The dream blockchain use case here, if you're a blockchain optimist, would be, for example, personal data. I store all of Evan's personal data in my blockchain, and I enable like individual access to this data for the companies I want to access it. And that's a really good use case of blockchain. The problem is that there's a lot of walled gardens and ecosystems, and it really changes the incentives and a lot of how I have to interact with businesses and applications to enable that state of the world. So theoretically, there are a lot of really exciting uses of blockchain. Like I would like to, on an individual basis, choose who accesses my personal information. But there's a lot of change that needs to happen in every part of the ecosystem to enable it. So I think on the personal data side, that's a really compelling use case, but also requires a lot more change than I'm willing to get excited about today. And on the data side, that also applies. If I am an organization like Bloomberg or the New York Times or Reddit, and I have a lot of content, is there a way to use the blockchain to license this in a kind of better model than today? Certainly, but that type of transition, I think, takes years, not, a shorter period of time.
Interesting. Yeah. Anything to add on there? Because there are going to be certain areas that will be, yeah, just we'll have the data to go ahead right away, and then other things will take longer, it sounds like.
Yeah, I think if you add on like in industries like healthcare, even in finance, just the data is so sensitive that
Yeah.
it's tough to
Just
go straight out
directly.
and license it out. But eventually, I think it'll take time. And I think for specifically any companies in those fields, healthcare, legal, et cetera, they have an interesting opportunity where it is proprietary for security reasons. So it is an advantage that they have that others won't.
Kind of going back to some of the things we've discussed, do you have a sense at this point, Vishal, what the spend is actually for both of you on, S&P 500 companies, TSX, big companies here? What kind of spend is happening right now? It goes back to, is this going to be super profitable? Is this going to be maybe less profitable? Do you have even a muddy picture of that? Do you have a picture of what companies are spending on AI implementation or whatever?
It's tough to exactly picture. I think right now, if you take a look at it, a lot of the spend is on testing. So it's on trials of existing AI solutions that were released recently. It's on things of that nature rather than maybe like a full-on, we're giving Copilot to everybody, for example. So it still seems small, and I haven't really seen any data points that would suggest that organizations are rolling this out to their entire employee base.
Okay. Yeah. Any sense of the spend?
One of the interesting data points is there's some controversy in software right now around enterprise software spend has been weaker. Also SMB in kind of the recent months. Is part of that organizational budget cannibalization
Right.
from software to AI spend. And so that's a data point that, you could perhaps say supports that AI is becoming a more material part of budgets, or that AI iteration. It's tough to quantify, but you have seen a slowdown in other parts. Or, another side of that explanation could be companies are just more hesitant to commit to software platforms given, how much AI could change adoption or use cases or workflows in their company. And so that's one of the data points that I probably put forth as supporting there is some sort of AI impact on budget, but to Vishal's point, I think it's really tough to quantify.
So interesting how that'll. So I was asking you just before we came on air: is software, is it bottoming? It's going through a bit of go like, or actually, is this a different type of cycle? I don't know if you call this a software cycle, but tell us what you're seeing in terms of the cycle. Some reflections on that. I'll ask both of you again. But
Yeah, I think
where are we in the cycle here?
we haven't seen a lot of software cycles, so
I
it's
know
tough.
it's
Yeah.
new.
Yeah, it's new, which is really interesting. And I think it's really interesting from a stock perspective when you're going through these
Yeah.
periods of uncertainty. But I think overall, what you're really seeing is just like high interest rates seems like it's just a negative for budgets overall. People in general, especially if you have debt on the balance sheet, maybe that takes priority in terms of it refinances, takes up more of your profits, and that cuts into other parts of your budget, which would include your IT budget. And it's tough to know when that's really going to change. I think if interest rates came down, maybe things would change, but not a lot of historical analogs, unfortunately, for this period of time.
For 20 years, there was rock bottom interest rates, so it is hard to sort of see back further than that for software. Any thoughts on that?
I think just the only other dynamic that could muddy the water on trying to figure out the cyclicality of software is you saw such a artificial demand pull forward in COVID because people had to digitize, people had to figure out software solutions to a new set of workflows, either remote or just not being able to access on-prem data centers or kind of whatever that looked like. And so rather than being a true cycle, you might have seen pull forward of an artificial level of demand, and some of that artificial pull forward has gone away now, and we're back at more of a normal pace. So those are some of, I think, the things to think about of, what does a true software demand environment look like? And the other data point that I point to is software sales headcount is decreasing as well. And so that's just
why is that?
I think what you saw was because there was so much demand, quota attainment, and basically the ROI on hiring a software sales rep from 2020 to 2022 was very high. And now you are in a bit of a different environment. So I think you can almost see like headcount should in some way track what companies are seeing in terms of the software demand environment, because they want to be able to get access that demand with sales reps. And the sales headcount numbers are still not favorable.
Because so much needs to be figured out, there's testing going on. It's this moment of trying to figure out how companies will best use new technologies. Is there a little bit of a more internal, less sharing moment happening on? I mean, we talk about sort of in politics, it's more like a reshoring. It's not quite like that, but in the fact that you don't know to what extent you have security control over these new types of technology, and you're sort of keeping it internal a bit. Is that, I don't know, is that happening? And does it matter? I don't know. Would we share less while people figure this out inside the companies themselves? It's a big question.
That's a big question.
But it just strikes me as you'd want to be a bit careful.
Yeah, I think you have seen that. I think you've seen that in terms of companies protecting their data, maybe not allowing it to be accessed through APIs or paywalling those APIs. You've seen maybe a bit more carefulness around the monetization of that data in particular, if it's something that they have that's proprietary. And then from a model evolution standpoint, I think there's still questions in terms of like how advanced are the internal models that we don't know of.
And the cybersecurity component of that.
Yeah. So
I think you're definitely seeing companies react to that. Part of why the legacy hardware vendors are benefiting from AI is people are procuring those servers to run their AI workloads or iteration on-prem or themselves.
Right.
And that is probably for data security or governance reasons. And so I think that's a data point that really suggests that companies have some level of concern around privacy and cybersecurity and want to, or their data security, and want to iterate or develop these workflows internally on their on-prem stacks. So I think that's a pretty interesting dynamic, and I wonder if that changes or how that changes.
I mean, from again, I always think sort of in terms of like global geopolitics, so I apologize, but if you can trade less freely, for instance, it can cut off markets. So I was just wondering if there's like a little bit of an unintended interesting moment when we all figured this out, like it just becomes a bit more tight on sort of how companies interact with one another, basically, until they get it right. If we go back to the consumer discussion, for some time, we'll sort of figure out what do you think we're going to see on the consumer front? I want to kind of close out on what comes next. If it's not software figuring it all out like next month, but it is the consumer that leads the AI story forward. Do you think it's consumer that leads the AI story forward next?
Yeah, I think it will be. As Evan mentioned, people are familiar with the technology. If it does end up on the phone, it's, I think, a form factor that they're already very familiar with. And then I think there's clear use cases in terms of like what can it do for me in terms of writing emails, what can it do for me in terms of managing like your calendar, for example. So in terms of the use cases for the consumer, I think they're already apparent. There's less governance concerns if it's on device and on your phone and not necessarily going to the cloud. So I think there's lots of reasons to be a bit more optimistic about maybe penetration and usage of large language models by the consumer.
Okay. And again, within this moment of everyone trying to figure it out and software having a moment, you can find some real opportunities. I mean, is this a moment where you can go hunting essentially for good companies at low prices? It's just, it's one of those downdrafts that probably could be taken advantage of. So I just wanted you to kind of comment on what kind of opportunities this might present.
Absolutely.
Yeah.
Absolutely. I think you are seeing software sentiment be very negative right now. Multiples are back close to their lows that we've seen in recent years, and there will be software beneficiaries. And I think there's just a lot of attention on semiconductors and hardware now, which is great for people like us who can take longer term views on the software opportunity and see kind of value within some of the chaos right now in software. So this is the best type of environment to be an active manager in. Because what I do believe to be true is software will remain a secular winner. It will create a lot of value over the next 1, 3, 5 years. And the volatility allows us as active managers to really take advantage of that and deliver alpha when we're right on our views. So I think this is an incredibly exciting environment for software.
Yeah. Any comments on that? Because you've said we're not sort of through the woods at this point. So you must be looking quite carefully for when you get there.
I think I would echo Evan's comments in terms of things starting to look really interesting. And eventually, I think from a valuation point of view, it should start to bottom where it seems to be low relative to history at least. So it's definitely a good starting point to start looking at software.
Especially if you've got some liquidity to throw at it, essentially. Yeah, in the active side of things. Okay, fantastic to get your updates on all of these different points. I'm sure it'll be, again, a different conversation, quite different in another 2 months' time. So thank you for joining us today.
Thanks for having us on.
Thanks for listening to the Fidelity Connects podcast. If you haven't done so already, please subscribe to Fidelity Connects on your podcast platform of choice. And if you like what you're hearing, leave a review or a 5-star rating. Fidelity mutual funds and ETFs are available by working with a financial advisor or through an online brokerage account. Visit fidelity.ca/how-to-buy for more information. While visiting fidelity.ca, you can also find information on future live webcasts. And don't forget to follow Fidelity Canada on Twitter and LinkedIn. Thanks again. See you next time. The views and opinions expressed on this podcast are those of the participants and do not necessarily reflect those of Fidelity Investments Canada, ULC, or its affiliates. This podcast is for informational purposes only and should not be construed as investment, tax, or legal advice. It is not an offer to sell or buy or endorsement, recommendation, or sponsorship of any entity or security cited. Read a fund's prospectus before investing. Funds are not guaranteed. Their values change frequently, and past performance may not be repeated. Fees, expenses, and commissions are all associated with fund investments.